Hi there, very good morning. Welcome back to ET. Now you're watching Market Cafe with me, Kanishka Sarkar and Srishti Sharma. Over the next 1 hour, we'll tell you all about the global and domestic cues that you need to watch out for and also tell you about the stocks that you need to keep on your radar today. But Srishti, let's start with an eye on the globe and see how the Wall Street has fared. Now, Wall Street did wrap up a tough week with selling pressure in tech persisting. The Nasdaq, that tumbled around 3% week to date, marking its worst 5-day performance since early April, when it fell about 10%. The S&P 500, on the other hand, and the Dow Jones Industrial Average, they also lost more than 1% each for the week. Now remember, AI-linked stocks, they were the major drag. Oracle slipped nearly 2% on Friday, bringing its weekly losses to around 9%. AMD also fell about 9%, whereas Broadcom, that was down more than 5%. Now remember, it was on Thursday when the selling pressure began and we saw selling in big names like Nvidia, AMD, Tesla and Microsoft that weighed heavily on the markets. The Nasdaq Composite then dropped about 1.9%, the Dow's with almost 400 points. However, analysts do remain cautiously optimistic. Now in terms of what to watch out next, investors will be keeping a close eye on how AI and tech earnings are going to be going forward, and any commentary from the Fed on rate cuts, that's something that is very key to watch alongside macro data releases that could hint at the path of inflation and growth going forward. So yes, a tough week for the Wall Street, Srishti, but looks like things are pretty stable on the crude front.
Well, yes, nothing much happening over there, Kanishka, because as of now, what we see is that Brent crude is trading and hovering around that $64 per barrel mark. It's the crude futures that are steady after 2 weeks of decline that we have already seen, but the markets are always a forward-looking beast as they're awaiting the OPEC Plus as well as IEA energy market outlook reports, so all eyes will be on that.
That's right. That's about Wall Street and the commodity markets. But let's move on and tell you some of the top global stories that we are tracking this morning. Now, first up, the US Senate is moving closer to ending the 40-day federal shutdown, planning a vote on a stopgap funding bill that could reopen the government within days. Now, Democrats want healthcare subsidies protected, while the US President Donald Trump is pushing for direct payments instead. Now, the shutdown has sidelined workers, hit air travel, and could soon dent the US economy as well.
And Donald Trump is promising what he calls a $2,000 tariff dividend for most Americans, saying tariff revenue will help pay down the U.S. debt. Now, he says that the tariff revenue will pay down U.S. debt and reward working families as well, and also slammed the Supreme Court on Truth Social, saying the current debate over the legality of tariffs is ridiculous.
Moving on, however, U.S. Treasury Secretary Scott Bessent says that tariffs are not meant to raise revenue, warning those receipts will shrink over time as more U.S. factories reopen and domestic taxes rise. The government took in $195 billion in customs duties in the fiscal year ended September 30, well more than double the prior year. Bessent says that figure could top $500 billion in a year.
And China's consumer prices rose for the first time in 4 months in a sign that deflation pressure may be easing. October's inflation came in at 0.2%, slightly above the expectations held by holiday demand, but factory prices are still falling, marking a full 3 years of producer price decline, and analysts say that weak demand and soft exports continue to cloud the outlook.
Let's get you some more updates from China. Now, China is easing chip export restrictions, suspending its ban on shipments of key metals like gallium and germanium used in semiconductors. Now, the suspension runs through 2026, signaling a thaw in tech tensions after Beijing and Washington agreed to pause new trade measures. Now, China is also urging the European Union to speed up cooperation on chip and battery supply chains.
And BBC's Director General and Head of the News have both resigned after the criticism over the network edited a speech by Donald Trump during the January 6th rally. A leaked internal report accused the broadcaster of bias in its coverage of Trump and other sensitive topics. Now, Trump praised the resignation, calling the two very dishonest, while the BBC insists its journalism remains impartial and world-leading.
Valuation concerns, they fueled declines in the market across the region last week. So first up, let's take a look at how Hong Kong's Hang Seng Index is faring. That one is trading in the positive territory, up about 0.3% right now, close to that 26,319 odd level. In fact, it's gone up even further. It's up 0.6% right now, close to that 26,420 mark. So yes, that's about Hong Kong's Hang Seng Index. But now let's also talk about Japan's Nikkei, how that one has opened up. It's also opened in the positive territory. It's up nearly 1% actually, above that 50,720 mark, up more than 450 points right now. Other than that, Australia's ASX 200, that's also trading in the green. Very positive start over there as well. Up about 0.6% here as well at that 8,820 odd level. So yes, that's how most of the major indices have opened up. If we talk about South Korea's KOSPI index, that's actually leading the gains. It's up more than 2% right now at that 4,036 odd level. If you talk about China's Shanghai Index, that's the one that has opened slightly on a flat note, just about 0.07% higher right now, but it has managed to come to the green territory from red earlier, trading close to that 4,000 mark. So yes, that's how the Asia Pacific markets have opened up. Now remember, the investors in Asia, they're also passing October inflation data from China that came over the weekend, which was above expectations. Headline consumer inflation was at 0.2% year on year. Wholesale inflation, that saw softer than expected drop of 2.1% YOY. So yes, that's on the back of China's inflation data. But Nifty, if we talk about that, Nifty ended at that 25,492 level. So yes, below that 25,500 mark, we have given up that level as well. And today we are expecting an absolutely muted start for the day, but with a negative bias. Absolutely flat, just 0.01% of downtick is what we are penciling in right now. But yes, a negative start is what we are penciling in for the Indian market as well, Srishti.
All right, that's about the Asian check. But with this, let's also tell you which are some of the stocks that we will be watching out for in today's trading session. Some earning candidates as well as some of the other newsmakers. And firstly, let's start with Nikkei. The company did come out with a good set indeed. There has been a beat in terms of the operational performance as well as the top line, but the profit line versus the ET Now's estimate, there has been a slight miss. All across the board, the company did report a good and a stellar set in terms of the management commentary, or rather the con call key takeaways. They say that the 40% of the portfolio impacted by a rate cut to 5%, 70% of the orders were delivered same or the next day across 110 cities, while there's been no dilution expected in the fashion AOV going forward. And along with that, most of the brokerages have actually gone ahead and raised their target price on Nikkei. Case in point being Nuvama, Morgan Stanley, CLSA, they have gone ahead and raised then hiked the target price, and so is the case with Jefferies. From 250 rupees earlier, 285 is what they are targeting while maintaining their buy call. Other than that, JSW Cement will be in focus as well, as the company did come out with its earnings. So looks like a good set where the revenue has seen a jump of 17% on a YOY basis. Net profit at 86.4 crores versus a loss that the company reported on the same quarter last year. And even in the previous quarter, there has been a loss. And the operational performance has also seen an improvement, with EBITDA jumping almost 114 odd %. Concor will be in focus as well on the back of an order win, as the company backs a deal worth 158 crores. And Ashoka Buildcoin will be in focus as well, as the company has submitted bid for a project for the Northwestern Railway, Jaipur, and the accepted project cost is 540 worth odd crores. And lastly, Anant Raj did come out with its earnings. Look like a good set where the revenue has seen a jump of 23% on a YY basis. Is the data center business revenue target of 1,200 crores that has been set by the company to be achieved by FY27. So these are the counters that we will be watching out for.
All right, Srishti, then lots of stocks to watch out for. But how did the markets perform last week? How has the week gone by been? Which were the sectors that led the pack? And why did we face some kind of pressure over there? Ashesha is here to take us through all of that. Ashesha, over to you. Good morning.
Well, yes, good morning. And Nifty declined for the second consecutive week last week. Remember, we saw a decline of nearly 0.8% last week. So yes, it was a muted week on Dalal Street. Remember, Hindalco and Grasim Industries were the biggest losers on the Nifty 50 index. Hindalco, after Novelis reported very weak set of of numbers, and that weighed heavy on Hindalco's stock last week. Nifty, as I mentioned, was down 0.8%. In terms of broader market action, Nifty small cap snapped 2-week gaining streak, so broader markets were also under pressure last week. Nifty PSU Banking Index was the biggest sectoral gainer. That one was up 2%. It advanced for the third consecutive week. Bank of India and Bank of Baroda were the top gainers on the PSU Banking Index. On the losing side, though, oil and gas stocks, energy stocks were under pressure, so Nifty Energy Index ended with a downtick of nearly 1.7% last week. In terms of individual sectors, we had Nifty FMCG Index, that one was down 1.3%. Nifty Metal and IT Index also ended the week with a downtick of nearly 1.6 to 1.7%. On the gaining side, apart from Nifty PSU Banking Index, which I just spoke about, we had Nifty Banking Index, that one was up 0.2%. And Nifty Mid-Cap Index in terms of broader markets also ended the day with an uptick of 0.1%. So all in all, it was a lackluster week, and Nifty ended with a downtick of 0.8%. And we also had broader markets which were under pressure last week.
All right, thank you so much, Ashesha, for getting us all those details. So that's about the week gone by. But Ashesha, along with that, for today, tell us which are the stocks that are going to be in focus. Most of the candidates will be in focus on the earnings, I believe.
Yes, a whole host of counters in focus on the back of earnings. And first up, let's talk about Bajaj Auto from the Nifty 50 pack. And that one reported largely in-line set of numbers where margins expanded by about 70 basis points on a sequential basis, and management commentary also continues to remain positive. So the management of Bajaj Auto in their con call said that Bajaj Auto aims to outpace the 125cc plus category going forward. Exports will continue to grow at the rate of 15 to 20% going forward, and from several markets, export demand continues to remain very positive. So Bajaj Auto in-line set of numbers, management commentary was also on the positive side. Trent, meanwhile, also reported better than expected set of numbers, with revenue up 17% YOY, margins at 17.2% versus 15.9% that the company had reported same time last year. But we have a few brokerages which continue to remain bearish. In fact, we have Nuvama. They've written, they say growth momentum moderated in the quarter gone by, so perhaps some cautiousness coming in over here, but numbers were largely better than what the street was working with. Hexaware, meanwhile, a company from the IT sector, and they've announced an acquisition where the company said that they've acquired CyberSolve. This is a $66 million acquisition. This is to strengthen their cyber security play. So this is an acquisition that has come in the IT sector. Hexaware in focus on the back of this. Swiggy, meanwhile, the board of directors have approved 10,000 crore fundraising. This will be done via QIP, and a whole host of insurance counters will also be in focus on the back of insurance data that we got for the month of October, and most listed players have reported very strong set of data. So we have ICICI General Insurance, which reported a growth of about 16% YOY, Go Digit at about 21%, Star Health at 22.5%, and Niva Bupa at about 67%. So very strong operational data for the month of October from all of these insurance stocks, and the entire pack will be in focus on the back of this.
All right, then, lots of stocks to focus on. Thank you, Ashesha, for that. But moving on, in this week's The Interview with Aisha Faridi, we have 360 ONE Assets Anup Maheshwari. Financials, telecom and consumptions are all the three themes that he is positive on. Let's listen into his rationale.
Financials, it's a domestic sector. It's the largest. It's a third of our market cap. Frankly, without financials performing, it's difficult to imagine the stock market doing well.
But the only thing is, if global markets fall, so would financials because of the large FI ownership, no?
Well, a lot of that has already happened in terms of most of the FI outflow has been through financials.
Sure, yes.
And their positioning in financials, they're now underweight. So I think incrementally the impacts are more limited. I mean, one of the reasons financials underperformed was exactly for this. But I think we've seen the worst of that. Going forward, next year, earnings in financials will be a lot better, just given the lag effects of interest rates. And valuations are still very reasonable. So I think that's one sector, and it has potential scale and profitability. Another sector that we like, which is very domestic, is telecom. Simply because pricing is still incredibly low. The sector is obviously consolidated. I think you will also have a new IPO coming next year that Gio has mentioned. And generally, we've seen as the economics of a sector improve, there is huge scalability and value creation possible in that sector. Third, I would say the consumption side. Post these GST cuts, income tax adjustments, and with next year the pay commission sort of increases that could come next year or the year after, whenever it comes, we're talking effectively of a 7 trillion rupee or 7 lakh crore rupee benefit to consumers for them to consume. It has to feed into consumption in some form or the other. We're already seeing some strong signs of Diwali,
numbers coming
through. And our hope is that that continues through the rest of the year. So it does look like we're on a bit of a consumption turnaround as well. So these are three areas, I would say, financials, telecom, parts of consumption, which are very domestically centered, which could do well irrespective of the global situation.
But up until now, what's done well in consumption has been the entire premiumization and, everything from aviation to hotels to even retail. It's the premium end of consumption which has done well. Do you now think it's the chance that perhaps bottom-up stories would actually play catch-up?
So I think the premium end continues to do well. The the lower consumption items, I think, should have a bit of an uptick because a lot of the GST cuts are really targeted to that segment, as well as the income tax and eventually the pay commissions. So we should have some improvement even there from where we are today.
All right, but with this, viewers, it's time now to slip into a very short break. Don't go anywhere. We'll be right back with more on the other side.
In fact, the formal announcement has been made by the Parliamentary Affairs Minister. In fact, the session is going to be very stormy on the back of multiple political developments. In fact, the opposition is expected to target the government over voter list revisions issue, which is commonly known as SIR. Along with that, several key bills are likely to be taken up for consideration during the winter session. In fact, from a business standpoint, this session is going to be very crucial for the insurance sector, as the Insurance Amendment Bill 2025 is likely to be introduced. Along with that, the Constitution 113 Amendment Bill 2025 may be taken up, in addition to the Government of Indian Territories Amendment Bill 2025 and the J&K Reorganization Amendment Bill 2025, which could be part of the government's agenda for the winter session of Parliament.
All right, thank you so much, Prakash, for getting us all those details. But moving on to another story then, and amid concerns over the depleting number of combat squadrons in the Air Force, India and the United States have linked an agreement for the supply of engines for the MK1A fighter jets. And in August, the Cabinet Committee on Security gave the go-ahead for 97 LCA Mk1A jets to be manufactured by Hindustan Aeronautics Limited at the cost of around 67,000 crores. Now, the new engines to be produced will be used for these combat jets. My colleague Prakash Vedarshi joins in with more details. Prakash, take it away.
An important development for the Indian defense sector, as HAL has entered into an agreement with General Electric Company for the supply of 113 G engines and support package for execution of 97 LCA Mk1 program, a very crucial development coming in. In fact, according to the statement issued by the company, the engine deliveries would start from 2027 and the whole process will complete by 2032. Along with that, the contract for 97 LCA Mk1 was signed in September 2025, where a deal for engines and support package for the execution of 97 light combat aircraft Mk1A program was completed. In fact, with this agreement, the indigenous light combat aircraft Tejas Mk1 program will get a boost, and that will be very crucial to improve Indian Air Force capabilities. A very crucial development coming in. It is important to note that HAL missed the February 2024 deadline to begin deliveries due to delays in arrival of F404 engines under a previous agreement. with the GE Aerospace. Now, with this agreement, we are expecting the supply situation to stabilize and gain momentum going forward, and that will, of course, play a vital role in improving Indian Armed Forces capabilities going forward.
All right, so that's about HAL. Thank you, Prakash, for getting us that update. But moving on, post its second quarter earnings, we have Hindalco on the brokerage radar. Nuvama has maintained a buy call on the stock. Ashesha is here to take us through more details of the earnings and what brokerages are making of the results here.
Well, yes, Hindalco will continue to remain in focus today. Remember, Novelis had reported its numbers earlier last week, after which Hindalco reported its standalone numbers, and now Nuvama has come out with the report where they are maintaining their whole stance on the stock with a target price of 838. And also remember, Hindalco was the biggest loser on the Nifty 50 index last week. Nuvama says it reported weaker than expected set of numbers. Adjusted EBITDA was lower than what the street was working with. Higher cost of production, lower premium and lower alumina prices in the quarter gone by offset higher aluminium prices in the quarter gone by. So all in all, EBITDA, they say adjusted EBITDA was lower than what they were working with. Domestically, as far as domestic standalone operations are concerned, higher aluminium prices aided numbers for the company. Novelis earnings, meanwhile, they say will continue to remain tepid in the third quarter as well, amid seasonality factor and full effect of the plant fire that happened last quarter. They also say that the stock is likely to remain range bound going forward, so they are maintaining their whole stance in the stock. 838 is the target price. On the back of a slew of brokerage reports that we've got this morning, Hindalco will continue to remain in focus today.
All right, thank you so much, Ashesha, for all those details. But JSW Cement also came out with a very strong Q2 earnings on a YY basis. But sequentially, it has been a weak quarter. Ashesha, help us with more details on JSW Cement numbers.
Well, yeah, seasonality factors weighed heavy on JSW Steel's numbers on a JSW Cement's numbers on a sequential basis. But if you look at the numbers on a year-on-year basis, they will look very, very strong. In fact, EBITDA per ton shot up nearly 86% on a year-on-year basis, and that was the key takeaway from JSW Cement's numbers this time around. Remember, costs across the board were on the lower side, be it freight or any other kind of raw material costs were on the lower side, and that continued to benefit JSW Cement's earnings this time around. Net debt also declined on a sequential basis due to the IPO proceeds that the company received in the quarter gone by. Revenue was up 17% YOY. EBITDA margins at 18.6% versus 10.2% that the company had reported same time last year. As I mentioned, EBITDA per ton shot up nearly 86% YOY. This was on account of lower raw material costs, improved blending, lower employee costs and lower freight costs aided spreads for the second quarter as far as JSW Cement is concerned. Net debt, meanwhile, declined to about 3,200 crores from 4,500 crores at the end of previous quarter, and the company received IPO proceeds, and that aided a reduction in net debt in the quarter gone by. Meanwhile, remember, revenue growth on a year-on-year basis was aided by strong volume growth that the company reported. The QOQ decline was on account of seasonal factors, monsoon and heavy rainfall in several areas. Continued heavy rainfall also impacted numbers on a sequential basis. But all in all, if we look at the numbers versus estimates, it was definitely better than what the street was working with. EBITDA and spreads have grown substantially on a year-on-year basis.
That's right. So that's about JSW Cement. But Ashesha, lots of companies to track for you today. ONGC is also set to come out with its Q2 numbers today, where the net profit is expected to see a significant jump on a sequential basis. What are the other details that the street is penciling in?
Well, yes, for ONGC this time on a sequential basis, we are expecting strong set of numbers. So net sales could come in at about 33,000 odd crores, which will be an uptick of about 3% sequentially. Margins, meanwhile, are expected to remain steady at that 58.2, 58.3% mark. And as far as PAT is concerned, that too is expected to see a jump up of nearly 21% on a sequential basis. Remember, on a sequential basis, crude oil prices have risen, and that is likely to aid realizations for ONGC this quarter. APM gas allocation was also on the favorable side, and that is also likely to aid. Remember, oil prices, as I mentioned, on a sequential basis they've improved, but on a year-on-year basis they have fallen substantially. So on a year-on-year basis, if we try to compare the numbers, then ONGC numbers are definitely going to look weak. Gross crude oil realization is expected to decline 14% YOY, but jumped nearly 2% on a sequential basis. And as far as net crude oil production is concerned, that is likely to rise by about 1.5 to 2% on a sequential basis. As far as gas volumes are concerned, they too were on the higher side. So both oil and gas volumes are expected to see an uptick of nearly 2 to 3% on a sequential basis. On a year-on-year basis, numbers will look weak, but sequentially on account of higher oil and gas realizations and higher volumes, we are expecting strong set. Remember, update on a ramp-up of their gas production will be crucial this time around. But yes, all eyes will be on ONGC, which is set to report its numbers later today.
All right, thank you so much, Ashesha, for all of the detail. With this, we let you go, but let's put the spotlight now on Hexaware. That said that it's acquiring CyberSolve, a company specializing in identity access management, for $66 million to strengthen its presence in the fast-growing cybersecurity segment. Let me take it across to my colleague Mitali, who joins in with more details.
Right. So Hexaware Technologies has acquired CyberSolve for around 550 crores to strengthen its cybersecurity portfolio. Of this 550 crores, around 287 crores will be paid upfront, while the 263 crores tied to performance milestones. Now the deal gives Hexaware value, which is right now valued at around 41,000 crores, a foothold in the 8.3 lakh crore identity and access management market, which is growing at a CAGR of 15%. IAM includes areas like authentication, role-based access control, single sign-on, and privileged access management. CyberSolve reported 9-month revenue of $18.5 million, that is approximately 163.5 crores in INR terms, while the analysts expect near-term margin dilution from the integration cost. Hexaware Q3 calendar year 25 EBITDA margins of 17.5% provides a solid base for the company. The acquisition is expected to unlock cross-sector synergies and boost the competitiveness in the fast-growing cybersecurity space, positioning Hexaware as a full-spectrum cybersecurity partner.
All right, thank you, Mitali, for that update. But let's move on and get you some more news stories, national news stories that we are tracking for the day. The countdown begins for the final phase of Bihar polls. From NDA to Mahagathbandhan, political leaders have left no stone unturned to woo voters of Bihar. Meanwhile, vote counting is scheduled for November 14th of this year. Now, the term of the current Bihar Assembly ends on November 22nd, and a total of 2,616 candidates are contesting
5cc plus segment. Now, in terms of the new model launches, that seems to be exciting as well, because in the times ahead, 3 new Pulsar models, 1 new brand in FY27, and new Chetak variant is planned in the times ahead. So that is one of the exciting factors about Bajaj Auto commentary, and in the export market as well. 15 to 20% of the growth is what they are penciling in, and case in point being Mexico, wherein the tariff has been hiked to 35%, but Bajaj Auto remains to be select companies which retains the 5% concession, and that can actually give an advantage versus the competition for Bajaj Auto. So these are some of the key takeaways from the management con call, and brokerages are finding this positive too, because they have gone ahead and given it a thumbs up to the earnings. Firstly, let's talk about DAM Capital, where they have upgraded the rating on the stock from a sell rating earlier to a neutral rating now. Raised the target price to 9,040 rupees. What they are highlighting is that the double-digit EBITDA margin in the electric portfolio, due to the richer product mix and better unit economics, is something that they are liking. The company has gained market share in 125cc as well as 150cc segment, and the new launches look quite exciting. Even Antique has resumed the coverage on Bajaj Auto with a buy rating. Target price 9,900 rupees now, while for Nuvama as well, they continue to maintain their hold rating but have marginally slashed the target price to 9,700 rupees. And while Elara retains their accumulate rating with a target price of 10,345 rupees. With the optimistic outlook on the domestic market, export momentums to continue is something that they are liking in Bajaj Auto earnings. So that's about Bajaj Auto. All eyes on that.
All right, so that's about Bajaj Auto. But moving on, Trent has also reported a very good set of numbers for the second quarter, with profit EBITDA and margin beating the street estimates, while revenue, that was in line with the expectations. In fact, its board has also considered and approved tendering of 94,900 equity shares held by the company in Inditex Trent Retail India, that's proposed at a price of more than 15,400 rupees per share. Snehi, my colleague, is here to take us through all the details. Snehi, over to you.
Well, yes, so if you talk about trends Q2, visually it looks like a good set of numbers because revenue is in line with expectations, but better than estimated numbers on the PAT, EBITDA and EBITDA margin front. But let's tell you what some of the street's concerns are. If you take a look at the revenue, it's coming at 4,724 crore rupees. It is an uptick of 17.1% on a year-on-year basis, which is historically very slow compared to the pace of revenue growth that we have seen for trend for the last many quarters. Net profit is up a healthy 6.5% at 451 crores, EBITDA at 813 crores. EBITDA margins have also expanded and a beat versus street estimate. So this is something that stands out for trend at 17.2% compared to 15.9%. So 130 bips almost uptick on a year-on-year basis. If you take a look at the revenue trend of trend in Q2 FY25, this growth was up 40% year-on-year, and now this growth is only coming at 17%. So this is the moderation that the street was expecting to see. In terms of the store count, they've added 13 stores in West Side and 40 for Zudio in the quarter gone by. Talking about the tender offer, Inditex Trent Retail India, which operates brands like Zara and Massimo Dutti in India, has offered Trent to tender 94,900 shares at a rate of 15,241 rupees in the buyback, and Trent board has considered and approved this offer. If you take a look at some of the new launches like Burn Toast, that has done well. Star on the flip side continues to be weak. And now let's understand what the brokerage reaction is. Very negative view coming in. Citi has downgraded the stock to a sell rating from buy and have cut the target price to 43.50 from 71.50 earlier. Morgan Stanley continues to maintain overweight, but a target price cut here. Similar is the stance for Goldman Sachs, wherein they've maintained neutral, but a target price cut has come in over here. Jefferies, Bernstein, they maintain hold and outperform respectively, but target price cuts over here as well. And Macquarie continues to maintain outperform with a target price of 7,000. Bernstein, maintains outperform with a target price of 6,100 rupees per share. So that's the brokerage reaction coming in on trend, a downgrade from Citi and target price cuts across the board. So well, yes, this is what the street will make out of trend. Operationally and visually looks good, but the pace of revenue growth has come down quite significantly.
All right, thank you so much, Snehi, for getting us all those details. But Snehi, what about Nykaa? That seems to be posted a strong Q2, but how was the management commentary? What are the brokerages penciling in?
Well, absolutely. If you take a look at Nykaa's Q2 numbers, a delight to look at. Strong set of numbers coming in from Nykaa. Let's understand what the numbers are. Revenue and EBITDA margins and EBITDA are in line with street estimates. PAT slight miss coming in, but not too concerning. If you take a look at their beauty and personal care vertical, the net sales is up 26.5%. GMV growth of 27.5% is better than what the street was estimating. Revenue growth in line. PAT has also gone up by about 37.5%. So good move over here as well. And House of Nykaa has also done well in terms of its GMV, which is up 74% year on year. And their fashion vertical, now this is a vertical that has been doing very well in the last quarter. Remember, a few quarters ago this vertical was trending in the loss. It continues to be in a net loss, albeit that loss has reduced. So if you take a look at the net sales, it's up about 27%. GMV up 36.5% is a beat. Revenue growth of 21% is a beat. Net loss has come in at 21.3% compared to 32.4% 4 crores this time last year. So a massive cut over there. House of Nykaa overall GMV run rate at 2,700 crore rupees. eB2B Stopper GMV has also done very well. If you take a look at their con call takeaways, they say that 40% of their portfolio is now at 5% GST compared to the 12 and 18% slabs earlier. Dot and key margins are in high teens. They continue to do well, and there's a 50% customer retention over there as well. Lastly, if you take a look at the brokerage notes, Nuvama has maintained a buy rating, hiked the target price to 285 from 235, and that has been the case across brokerages, wherein the stance has been maintained, but target prices have been hiked, which is the case with Morgan Stanley, wherein they maintain their overweight rating. Target price hiked to 271 from 253. CLSA maintains accumulate. Target price hiked to 298, and Jefferies maintains buy. Target price hike to 285. So watch out for how the stock reacts. But well, yes, overall good set of numbers coming in from Nykaa.
All right, so a good set coming from Nykaa. So that's about Nykaa. But ahead of the listing, Lenskart co-founder Piyush Bansal has penned a heartfelt note to shareholders. He's emphasized the company's 15-year-old journey, driven by a mission to help people see clearly and to live fully, not just chase valuations. In fact, he has highlighted the company's commitment to customer experience and building global Indian institutions. Snehi, tell us how well the IPO was subscribed and what is the listing scenario looking like?
Yes, if you take a look at the listing scenario, let's look at that. The issue price was at 402 rupees per share. And if you take a look at what the grey market premium is right now, it's about 12 rupees. So we're not expecting to see a very blockbuster listing. In fact, a premium of 3 to 4% is what the street is estimating right now. So let's look at different listing scenarios. First, if it lists flat, which is exactly at that 402 rupees per share, the price to earnings comes up to 285 times. Let's take a look on the positive side first. If it lists as at a 5% premium, which would be a listing price of about 422 rupees per share, then their price to earnings would come close to 300 times, and a 10% premium, wherein the listing would be at around 442 rupees per share, the price to earnings would go up to 313.5 times. On the flip side, let's also pencil in some bearish cases, wherein if the listing happens at a 5% discount, then the price would be about 382 rupees per share, and the price to earnings would come down to 271 times, and at a 10% discount, the listing price would be at about 362 rupees per share, and the price to earnings would trend lower at 256.6 times. So these are the different kinds of listing scenarios. Remember, on the day one itself, the retail book was subscribed, and overall the subscription to Lenskart has been very strong. But well, yes, we're expecting to see a very flattish listing. The grey market premium is penciling in only a 3 to 4% premium right now. So we'll see how the listing happens. But yes, these are the different scenarios and prices at which we could see Lenskart list today.
Thank you so much, Snehi, for all those details. All eyes on that. But the management also touches upon the key growth levers. Let's go across and listen in.
Comes to Lenskart, we have been very particular that the product quality and the product price to the customer both come together, and that total customer experience package creates a 10x, a 10x value for the customer, not an incremental value. So I think our focus is going to continue to give surprising experience to the customer. From a Shark perspective, if I was pitching this on Shark Tank, I would say, this would be an investment into a mission to give vision to 1 billion people. We have only served a few million people right now. We believe that we have the intent, the commitment, the talent and the culture, and investments in technology, which will continue to make to eradicate visual impairment like we did polio many years back. And so please be part of that journey in helping us make the world a better place.
All right, so that's all about Lenskart's IPO and its listing going forward. But let's take a look at India's general insurance industry, which has logged a mixed growth in October. Total premiums have risen to 8.5% on a month-on-month basis and 5.3% on a year-on-year basis. That's led by strong gains for ICICI Lombard, Go Digit and Niva Bupa. So yes, that's about the general insurance industry. But let's move on and also take a look at some of the earnings that are going to be reported later today. Now, Bajaj Finance is all set to report its numbers for the second quarter of this fiscal. That is later today. And Harsh, my colleague, is here to take us through all the expectations that the street has from the stock.
Right, so Bajaj Finance already disclosed a healthy 4.7% QOQ growth on the AUM metric. So that has done fairly well for itself. But let's talk a little bit about margins. They're expected to inch up a little bit, which should aid overall bottom line growth for Bajaj Finance this quarter. The other piece which will likely aid bottom line is the loan loss provisions or the provisioning itself. Now, credit costs, of course, or provisioning will inch downwards on a sequential basis. That is the likelihood. Also, the outlook with regard to that number will hold key. The expectation is that you will do a 1.85% credit cost in FY26. Hopefully, nothing changes on that count. So that is something that we will look out for where Bajaj Finance is concerned. Now, let's talk a little bit also about how the environment is shaping up with regard to profitability for Bajaj Finance. Profit after tax expected to inch upwards just a shade below 5,000 crore is where that number is anticipated, and therefore you'll have your eye out on that number as well. So strong profit surge around 4% on a QOQ basis is where we're penciling in that profit after tax number.
All right, thank you so much, Harsh, for all those details. But let's talk about the general insurance industry, as India's general insurance industry logged a mixed growth in the month of October. Total premiums rose by 8.5% on a month-on-month basis and 5.3% on a year-on-year basis, led by strong gains for ICICI Lombard, Go Digit and Niva Bupa. Let me take it across to my colleague Mitali, who joins in with more highlights. Mitali.
Right. So if we see on an year-on-year basis, ICICI General Insurance had their share raised to 16.3% for the October data, and Go Digit also 20.7% year-on-year raise in the gross direct premium, underwritten premium data. Star Health saw an increase of 22.5%, while Niva Bupa saw an increase of 66.6% year-on-year basis. While if we see on the basis of the market share, Niva Bupa's market share has marginally raised by up to 15 basis points in spite of that 66% increase in their GDPI data. Also, the New India Insurance, if you see, the market share rose by around 87 basis points, while for ICICI Lombard, it was down by 38 basis points. For Go Digit, if you see, it was up by 18 basis points. So that was the October data for the general insurance segment.
So that's about the general insurance industry data. Thank you, Mitali, for that update. But with that, we're completely timed out on this edition of Market Cafe. Srishti and I will take your leave. But don't go anywhere. The market will take all the action forward.